It's Saturday, the 25th June 2016. Well, we're out. The British public have decided. Brexit. The video. This is what we think will happen in the next few months. Okay, the first thing I would say is calm down, everybody. Take a deep breath and calm down. It's going to take at least 2 years from the point when the red button is pushed, and that will only be pushed when we have a new Prime Minister in October. Secondly, and most importantly, already Angela Merkel is talking about Britain having an associate status within the EU and looking to negotiate with us. Clearly, we have an upper hand in negotiations now. You may like it, you may hate it, but the British electorate have spoken and they have decided that we are out. And I think now we should stand behind that decision, whether we agree with it or not, and look at the positives from it. We are an incredibly, in fact, resourceful country, and we've come through a lot worse than this. Mark Carney, the Governor of the Bank of England, said that our resources are now so high that we've stress tested against much worse scenarios, and there's no way that this will give us any financial difficulty. And then it all comes down to confidence. And in terms of the fundamentals of the market, they remain the same. We still have more people looking for homes than we have homes for sale. We still have huge demand for rented property. What do we expect to happen next? Well, two things. First of all, we expect some buy-to-let landlords that were thinking of investing may actually step back and wait. And that may be a good thing for the first-time buyers to step in, and it may actually just cool off the market a little bit, and that may not be a bad thing if you're a first-time buyer. I mean, after all, an overheating market is not in anybody's interest, and if the market were to just correct itself by just not rising, and that seems to be the most likely scenario for us. We expect that the market will continue at around the same level as it is now, but the meteoric rises that we've been used to could be a thing of the past for some time, and that's a good thing. What we want in the market is stability, and confidence remains high. I think it will get higher because the next thing we're likely to see is, with a lack of buy-to-let investment, there will be huge demand for rented property, and there's no one there to fill that gap. For that reason, we will find that rents rise and therefore yields increase. And as potential buy-to-let investors see the increased yields, confidence will regain, and over time those fundamentals, the imbalance of a lack of supply plus house builders now, if you think about it, if you're a house builder, many of those will land bank. They've been looking for excuses to do it anyway. This is the process where they have a piece of land they can get planning on, but they choose to hold on and wait for the market to rise so they can make some more money out of it. The government often criticise this, but this is their ideal excuse, if you like, to go ahead and land bank. And if they do that, then the projections we have for current housing, where they were saying that they were building X amount of houses, which by the way weren't enough anyway, will go down. And this will increase upward pressure in pricing as well. So I think in the end, calm down everybody. We're a very resourceful nation. We're not going to slip into the ocean just because of Brexit. So watch this space. We'll keep you updated on events.